From R.D. Smothers Wealth Management, this is The Retirement.
When you retire, if you want an exciting life, you need a boring investment strategy.
Matters.
If you enter into retirement without a plan for income, you're not retired, you're simply unemployed.
Podcast.
Hey, this is your host, Dale Smothers, and you're listening to the Retirement Matters Podcast. My hope is that you will find the information you need in every single show on how to do one of the three things: either saving more money more efficiently, planning better for your future where you can live in retirement worry-free, or my favorite, how you can live a happy and fulfilled life in this life you have been given. We know that your time is valuable, and we appreciate you spending it listening to this episode of the Retirement Matters Podcast. On this episode of the Retirement Matters Podcast, we talk about financial winter, what it is, and how to prepare for it. The objective of this show is not to scare anyone, but to prepare you emotionally for something that takes place every single year, almost without fail, and that is the slowing down of the financial markets starting in August, going through September, and all the way into and sometimes even through October. We tend to see this slowdown effect take place, and for that reason, we at RDS Wealth call this the financial winter, to prepare our clients for what is to come and what very easily could be as much as a 5, 10, or more % pullback in the markets. For this reason, as we work with clients who can't afford to take those losses, prepare portfolios to go through winter based off of where they are and what their objectives are in retirement. If an individual is, say, 15 or 20 years away, we are preparing that portfolio entirely different than if an individual is 15 or 20 weeks away. This type of planning for our clients takes time. And what my intention is to get this out into our podcast listening audience to allow you the time necessary to prepare. Now, I'm not here to tell you that this particular winter is going to be the worst one we've seen, not by any means. But I am going to tell you that there are some variables to this particular financial winter season that we need to be aware of. And if one small thing takes place, it could be a snowball effect, no pun intended. This idea that technology is overvalued, if people wake up to that and then try to be the first to rush to the exit, we could see a pretty nasty pullback in some of these companies. And whether or not you should be okay with that depends on where you are in your journey. Now, at the end of this show, I talk a little bit to those who are younger, maybe how to invest. But I'm going to tell you here in this intro, which is going to almost be an extension of the show. If you are young, financial winter should not scare you. Instead, it should be a time for opportunities. Very similar to when you are young and it is time to go sledding. It's an opportunity that you get here in Kentucky and in Tennessee that you don't get very often. And it doesn't always present itself, but when it does, go have fun with it. But I'm telling you, if you are an older individual, over the age of 59 and a half specifically, you need to be prepared for financial winter. And it's not time to go out and do the sledding. It's time to be safe. It's time to stay warm. And it's time to buckle down and make sure that you survive. We help you do that here at RDS Wealth. And it's not just about this winter. It's about every season to come in your retirement journey. Now, I'm going to get to the show, and I don't know exactly what our marketing team's going to call this particular episode, but I will tell you that if you're not prepared for winter, it's likely that it will hit you, and emotionally, it will be challenging for you to stay invested. If you are prepared for winter, no matter what it is that you have done in your portfolio, knowing that brighter and warmer days are ahead is half the battle. So with that being said, let's jump to this week's episode of the Retirement Matters Podcast. And I hope that you find something very useful and are able to glean a little bit of knowledge that you can take back to your own portfolio. If you need any assistance in implementing that, give us a call or navigate to our website, rdswealth.com. Be sure you like, subscribe, follow, and even comment or review our show so we can get out to more and more listeners just like yourself. So without further ado, enjoy this week's episode of the Retirement Matters podcast. Good morning to you. I hope you're doing well and you're ready to start discussing all things retirement matters. We are going to be talking about financial winter this morning. And I know that the weather has not yet turned here in Kentucky, but the financial winter may be upon us, and we're going to discuss what that means. Winter in the financial markets and how you can navigate around this, especially as you enter into retirement. We're going to get into that and discuss all of the things that we can be doing here over the next 30 minutes, no matter where you are in your retirement journey. So this is going to be a good show for you if you are close to retirement or you are far away from retirement. What this means for you. We've had several questions about this from our most recent television series that we did. And again, we'll discuss all of that later in the show. But let's get to the pause for positivity. And today's pause for positivity is all about making sure that you are not judging someone based off of one instance or one occurrence of who they are. You have seen things in the news about certain people, no doubt. You have even witnessed certain people's actions in the past, and you have likely made a judgment about that person or about that topic based off of a limited amount of information. It's human nature to do that. And I just want to challenge you to always be open to a different perspective. That is our pause for positivity this week. I believe that shows a sign of intelligence, to be able to have a stance on a particular topic or a particular issue, and to be able to bring in an opposing point of view, to see that opposing point of view from all angles, to appreciate that opposing point of view, and to then release that opposing point of view, essentially to agree to disagree, perhaps, or even be open to allowing that to change your perspective in some way, form, or fashion. Now, you have to take a stance on things. You can't be wishy-washy, as my parents would say, but you certainly can entertain a different person's perspective and understand that perspective that they have, as well as the perspective that you have, is likely, I would say, skewed by a host of different variables. And to further illustrate this, I would like to tell you a parable of a man who sent his sons out to view a pear tree. He had 4 sons. It was an elderly man. He was full of wisdom, and he wanted to teach his sons wisdom. And that parable goes like this. You may have heard it before. A father sent his sons to a faraway destination to observe a pear tree. He told each son exactly where this tree was and how to find it. But when he told them to go, he told each of them to go at a different season. He told one son to go during the winter. He told one son to go during the spring, one son during the summer, and another son to go during the fall. When he sent the 4 sons away, he then told them to come back with their report. And after they had all went to see the tree, he gathered them together and asked them to describe what they had seen. The first son said that the tree was ugly, bent, and twisted. The second son that went during the spring said it was covered with green buds and it was full of promise. What in the world did you see, brother? The third son stepped up and said, No, I would totally disagree. This was laden with blossoms that smelled so sweet and looked so beautiful. It was the most graceful thing I had ever seen. And when the fourth son began to talk, he said, I disagree with all of you, because the tree that I saw was ripe and blooming with fruit. It was full of life and fulfillment, not potential, fulfillment. The man then explained to his sons that they were all right because they had each seen this tree in different seasons of its life. He told them that you cannot judge a tree or a person by only one season, and that it is essential for you to take pleasure and joy in all of the seasons that come with life. Life can only be measured in the end when all seasons are up. Now, it is not our job to judge. We're all aware of that. But it is difficult for us not to, and sometimes it is even important for us to put some judgment on situations. And all I'm telling you is to be careful and understanding that what you believe to be true is a perspective, unless it's the absolute truth of Christ dead, buried, resurrected, and coming again. Unless it's that truth, things can and should be questioned if other evidence is presented. And I'm going to close with something that I heard a speaker talking about a few weeks ago. It's kind of stuck with me, and I'm going to do my best to summarize this. I'm thinking how he said, I think he said it like this: humanity does not look at a situation as it is, as the situation is. Unfortunately, humanity looks at a situation as we are, as humanity is. And what he was getting at is, if you're not careful, the situation you find yourself in can oftentimes reflect the way that you view a certain situation that's taking place out in the world, the way you would judge a person or judge an issue. So be careful, because when we're in our lowest point, if we make decisions, and my father's told me this many times, you never make a decision in your highest point or your lowest point, because it's oftentimes the wrong decision. An emotional decision should not be the decision that is made. It's the same with judgment, and it's the same with reaction. Taking time and taking a little bit of thought before a jump is often the wise choice. There's our pause for positivity. Let's just pause and maybe consider things a different way. All right, and with that, we are going to a break. Whenever we get back, we're going to jump into, speaking of seasons, we're going to jump into the financial winter, and we're going to talk to you about what you need to be doing in this period of time almost every year. We're going to talk to you about what September and October often brings to the financial markets and ways that you can take advantage of that, no matter where you are on your retirement journey. Don't go anywhere. We're coming right back after this.
It's 4th and 1 with 2 seconds left in the game. Less than 1 yard separates you from victory. You have the best running back in the league, but your coach calls a Hail Mary.
As silly as that sounds, we see a lot of retirement managers being far too aggressive with your investments when a more conservative play would be a better fit. You have questions, we have answers.
Contact R.D. Smothers Wealth Management, 270-600-PLAN. That's 270-600-7526.
All right, welcome back to the show. We're going to talk about this financial winter phenomenon that takes place. And if you've been following our content on Facebook or maybe on YouTube, maybe you've listened to some podcast, you have likely seen us discuss this financial winter phenomenon that takes place every year for quite a while. However, we were in New York. I was in New York last week, I think it was, throughout the week, and was able to share our philosophy around financial winter and why it's important for the clients that we work with, because a lot of the clients we talk to just can't stand to see their accounts go backwards. And whether that's emotionally, they can't stand it, or they physically, mathematically just can't stand to have losses. We discussed some opportunities for viewers of these stations. We were on television in New York, and we discussed some opportunities for people that were in the market on how to better prepare their portfolio. And one of the interviews that stuck out with me was the one that we did with Charles Payne on Fox Business, where he started the segment by saying financial winter sounds kind of scary. It's kind of nasty out there. And I responded in the moment there. Those things are not scripted, so I was kind of caught off guard when he said that. But I responded with, my objective is not to be Jon Snow, which is a reference to Game of Thrones, if you watch or have seen that before. Jon Snow is famous for saying winter is coming, because winter in that show brings a lot of bad things, apparently, in that show. And so I'm not here to say that death and destruction is on its way. What I'm here to say is that September specifically, but August, September, and October are historically pretty weak months in the market. As a matter of fact, September is 56% of the time negative. You've heard us talking about this over the last few weeks, even leading up to September. But what we have done for our clients, and what we would recommend perhaps some other individuals to do that we're working with and beginning to work towards a partnership on, is to make sure that their portfolio is in a place to weather this financial winter. and, no pun intended, but all pun is intended, to weather the storm of a potential winter storm. And if it does hit your portfolio, how will you react? How will you fare in this winter storm? What does a winter storm look like, Dale? Well, a winter storm would be, somewhere around 10-ish, let's say, 5 to 10% pullback in the stock market. And what does that mean? Well, if you have $500,000 in your portfolio and you were fully invested in the stock market, now within a matter of just a few days, maybe a week or two, you're looking at $450,000. There's a 10% pullback on your portfolio. If you have $1 million, now you're looking at $900,000. If you have $200,000, well, now you're looking at $180,000. And how would that make you feel? Would it make you feel concerned? If you knew what you owned, would you be ultimately concerned? And it really depends on where you are in your journey as to whether or not you should be concerned. If you are in retirement income phase, a 10% pullback without knowing that there is some protection on that income should make you very concerned. If you are near retirement income phase, a 10% pullback in your overall portfolio, a 10% pullback, could make you have to work an additional year or two. This is where we really start to build retirement plans with what we call the risk-on, risk-off approach to retirement. You can look this up on our Kiplinger magazine that was recently published, the risk-on, risk-off retirement portfolio. The risk-on, risk-off portfolio, I think, is what you need to Google if you want to look that up. But this talks about the ability to build a portfolio that has stability on at least a portion of your money. What does stability mean? Well, stability means that if the market goes down, your money that's in that risk-off piece doesn't move much at all, if any at all, depending on your risk tolerance and the ability for your plan to weather a weathered, let's say, winter, a blizzard. God forbid it's a blizzard. Maybe it's just a brief dusting of snow. And I hope you're catching on to my analogies here. So understanding that August, September, and October would be what we consider the winter months. And by the way, when I was in New York talking to Charles Payne specifically, and he said, Charles Payne on Fox Business, he mentioned at the very beginning, he said, winter sounds kind of nasty, but a New York winter is not what I'm predicting. I'm truly predicting Kentucky or Tennessee winter, which means sometimes it can be good, not too bad at all. Sometimes it can be really bad. And it just depends on a lot of different variables. Well, there are some variables specifically coming up that are approaching us very quickly as we get into the month of September that can and will change the way that this financial winter plays out. So what I want to do is I want to take a quick break and I want to reset. Now that we understand what financial winter is and what it means, I am not saying that we're headed to a recession or a depression and these words that are all trigger words in the news. I'm not saying that. But I'm telling you that financial winter is here, whether it's a good winter, meaning the market doesn't do anything abnormal, or it's a bad winter. I wouldn't expect September to be a month that the market is up substantially because that just doesn't happen very often. But there are months where it doesn't do much. It's maybe barely down or barely up. And there are months where it goes down pretty drastically. And whatever this September brings your way, I want to show you by the end of this show a couple of things that we're doing with our clients to help safeguard their portfolio. And I also want to talk to you about why we think in this next segment, why we believe that this winter, if it is bad, it could get pretty bad for a short period of time. I'm not talking about recession, but there are some things specifically taking place in the next few weeks that could cause some sell-off in the overall market. And I want to tell you what that looks like when we come back. Before we go to a break, I want to tell you, if you are interested in talking to a team member, give us a call, 270-600-PLAN. We would be more than happy to sit down with you and see if your portfolio is ready to weather not only this winter, but all the potential storms that could come along your retirement journey. You have a very long and successful retirement ahead of you if we put the plans in place to make it happen. We would love to be the team that helps you do that. 270-600-PLAN or navigate to our website, rdswealth.com, and set up a time for us to call you at a convenient time that is good for you. 15 minutes could be the first step towards making retirement everything you've always imagined. We're going to take a quick break, and when we come back, we're going to talk about what is about to take place over the next couple of weeks that could lead us into a little bit worse than normal winter. Don't go anywhere. We're coming right back after this.
You're listening to the Retirement Matters Show with Dale Smothers. Dale is the founder and president of R.D. Smothers Wealth Management. We specialize in building retirement plans that allow you to walk away from the worry of running out of money. If you'd like to chat with a member of our team, you can do so absolutely free by calling 270-600-PLAN. That's 270-600-PLAN. Visit us online at rdswealth.com and be sure to sign up for our free weekly newsletter.
All right, welcome back to the show. We're going into the explanation of why I believe that this particular winter is set up to be a very volatile period of time. Remember, financial winter, August, September, October, those are the 3 months that we would say is a winter season in the markets overall, whether it's good winter or bad winter. And I'm not here to tell you that everybody is suffering the same type of winter. Just like America has Florida winters and New York winters, they're totally different. Seattle winters look way different than Southern California winter. I'm telling you, depending on your portfolio, things could get kind of nasty or they could be okay. And we want to build a portfolio that is okay. We want to build a portfolio that can weather these storms and still generate the income that you need. But if you are heavy in technology, you have a higher risk of a financial winter storm. Why? If your stocks that you own, your mutual funds, your 401ks that you own are heavy in technology, you are owning stocks right now that are overvalued. What does that mean, Dale? Overvalued. Overvalued means that if a stock is, let's say, really worth $100 a share, if someone came in and bought all of the shares at one point in time, maybe that particular stock is actually trading at $120 or $130 per share right now. And if that's the case, then we would consider that stock overvalued. There are many ways to determine what the value of a stock is, and it's all relative and it's all based off of interpretation. So it's hard for us to pinpoint exactly what a stock is quote unquote worth because it's worth what someone's willing to give you for it. But one of the ways that we can start to look at stock prices and know whether or not they're worth this particular stock is something called a price to earnings. And we often will use a future earnings. And there are companies right now that are trading at 50 and 60 times future earnings, which is very, very hard to justify. And these stocks are based off of future earnings, which are all based off of such new technology that with one small change in demand, those stocks become significantly less valuable. This is concerning for an individual who may not want that volatility. Well, how do I know if I'm in tech stocks, Dale? That could be a question. Well, here's how. If you are seeing your portfolio right now, year-to-date return, somewhere between 8 and 9%, then you are likely exposed to some technology in your portfolio. If you're seeing 10% or higher rate of return, you are very likely seeing some technology in your portfolio. And I'm not saying all technology is bad, trust me, because it has gotten us to where we are in the overall market. But I'm telling you, you better be prepared for a little bit of a pullback with the smallest demand change. The change in demand for this technology may make that particular stock suffer. So when we look at your overall return, the S&P 500 as a whole has 500 different companies in the S&P 500, and over 40% of the S&P 500's total valuation is wrapped up in 10 companies at the top. So you'll hear us talk about, and if you watched our Fox Business interview, we talked about the S&P 10 versus the S&P 490. The S&P 490 is a play on words saying the 490 stocks that are not the top 10 haven't really done much this year. They haven't done a great deal of growth. The S&P 500 has been drug up by, and especially the NASDAQ has been drug up higher buy the top 10 companies, and those top 10 companies are slightly, if not significantly, overvalued. So with one small adjustment in those prices alone, the entire S&P 500 suffers. What does that mean for you? That means that you need to be prepared for this financial winter. And if you are prepared adequately, you don't have to worry. We're going to tell you how as soon as we come back here. In just a few minutes, I want to tell you, and I'm not leading you on. I've got 9 minutes to tell you what we're doing specifically. It's going to get a little technical. If you're trying to do this on your own, you're going to have some really good understanding of what we're doing behind the scenes for our clients. If you're not doing this on your own, or maybe you have an advisor that you're just not 100% sure that maybe your interest and their interest align, maybe you've got a growth advisor and you realize you're transitioning into income phase. You're over the age of 59 and a half, and you need an income advisor to take a look at your portfolio. Give our team a call, 270-600-PLAN. We can begin to get very specific about what you need to do in your retirement to not only make sure that your investments are ready, but that your healthcare plan is ready, Medicare, and everything that's coming that way. Make sure that you know where and when you should be taking Social Security. You should also understand what taxes are going to do for you or against you in retirement, how we pay for long-term care, when and where income is coming from, the choices you need to make in pension, and how to set up your accounts to get them to your beneficiaries, aka the ones you love the most, as tax efficiently as possible. All of this are things we do with you, for you, and alongside of you in this retirement journey here at RDS Wealth. 270-600-PLAN will get you in touch with a team member. You can reach out to us on our website, rdswealth.com. Set up a time for us to reach out to you that is more convenient. Either of those two things. You want to come into office? Give us a call. You want us to give you a call? rdswealth.com. We are going to a quick break. When we come back, we're going into what you need to be doing to weather this financial winter that is upon us. Don't go anywhere. We're coming back with more right after this.
Thank you for listening to Retirement Matters, presented by R.D. Smothers Wealth Management. If you'd like to speak with us, give us a call at 270-600-PLAN. And if you enjoy the information in this show and would like to hear more, you can access previous shows by searching for the Retirement Matters podcast on the podcast platform of your choice. We also produce a weekly newsletter. Receive it free to your email inbox by signing up online at rdswealth.com.
All right, welcome back to the show. We've got about 6 minutes here, and I'm going to give you some information that is very valuable for you. If you are over the age of 59 and a half, you likely need to be ready for what could come. We talked about this. What is financial winter, and why is it important now, probably more than ever before? Technology has taken us higher, and technology could easily and very quickly take us lower. So how do we prepare? Well, the answer is not to move to cash. The answer is not to take your money out and put it into CDs. The answer is also not to sell all of your technology and move it elsewhere. The answer is to diversify your portfolio in a way to where it is balanced across the entire S&P 500 perhaps, or the entire economy, the 500 stocks in America that make up the largest corporations in the world, essentially. We can buy all of them equally for you so that if a stock like, say, Apple does really, really well, you also do well. But if it does really, really poorly, you do not do nearly as poorly as that company alone. How do you do that? Well, there is one way to just buy the entire S&P 500 and hope for the best, and that's not altogether a bad strategy. But when we approach financial winter, being more selective is a wise choice. And the way that we like to do this is to diversify evenly across all 500 companies. There are ways for us to do that, and I won't get into the technicals. If you are well-versed in the market, you may know exactly how to do this. If you're not, we can help. But equally weighted ETFs provide you the ability to buy all 500 companies with the same amount in each company. You know how earlier I said that the top 10 companies made up 40% of the valuation of the S&P 500? Well, what that basically is saying is that if you buy an S&P 500 exchange-traded fund, you own all 500 companies, but 40% of the money that you put in are in the top 10 companies, which means if only one of those 10 companies goes bankrupt, let's just put the worst scenario out there possible, you may lose 4% of your money. Whereas if you had spread your money out evenly across all 500 companies, and one of those top 10 companies goes bankrupt, you would lose less than 0.2% of your money. This is what we're talking about, and I'm definitely not saying that a company in the top 10 is going bankrupt anytime soon, but I am here to tell you that it's likely, and more likely now in the financial winter than ever, that some of these companies may be reevaluated, and if they are, their stock price may drop. And if their stock price drops, I don't want your portfolio going with it if you're over the age of 59 and a half. If you're under the age of 59 and a half and you are, let's say, 10 years or more from retirement, you should not be nearly as worried as the ones who are over 59 and a half. This financial winter may be nothing for you. You may be in a position where you can just ignore winter altogether. Or you may be in a position to where you take some of your winnings, your earnings that you've made over the years, and you position them in a spot like the S&P 500 fund, like let's say SPY, and you buy that SPY and ride out the winter until you see names like Apple or Amazon, Microsoft, Tesla, Nvidia, these names that are household names that may suffer a little bit more in the financial winter may go on sale for you. And when you see them lower, you buy them lower. We're doing the same strategy for our clients that are over the age of 59 and a half or those who are under 59 and a half. If there is any money that is there for long-term growth, we're not hunkering down and sheltering in place. But what we are doing is preserving the money we've made in a way to where if and when things go on sale, we have cash to go shopping. We have positions that we can sell high and then go and buy low other positions that are likely to increase. Believe it or not, this show has went way quicker than I had anticipated. But I'll tell you, if you're over the age of 59 and a half, you need someone to assist you in planning for retirement. It's not just about your investments. It's one piece of your overall plan. If you're under the age of 59 and a half, let's just say if you're under 50 for sure, I don't think that this message of financial winter should scare you. Instead, it should make you be ready for opportunities that will present themselves. And I can't tell you that this particular winter, air quotes here, is going to be a bad one. But I can tell you that if you are not prepared emotionally, you will be challenged if and when a 10% pullback comes. And when it does, don't be alarmed. Stick to the plan. Making that plan before it happens is key. And we would love an opportunity to be that person for you that helps you build the plan and get ready for the retirement you've always imagined. If you're over the age of 59 and a half, give us a call and we can help you build the retirement plan you need to not only weather the storms that are in financial winter, but everything that is to come in retirement. 270-600-PLAN or rdswealth.com. We'll get a conversation started with our team today. I have really enjoyed getting to chat with you here for the last few minutes, and whether it's in person or it's right here on the same station the next time we talk, between now and then, always remember these three things: save money, plan well, and live happy in retirement. God bless.
Investing involves a risk, including the potential loss of principal. Any references to protection, safety, or lifetime income generally refer to fixed insurance products, never securities or investments. Insurance guarantees are backed by the financial strength and claims paying abilities of the issuing carrier. This radio show is intended for informational purposes only. It is not intended to be used as the sole basis for financial decisions, nor should it be construed as advice designed to meet the particular needs of an individual situation. R.D. Smothers Wealth Management is not permitted to offer, and no statement made during this show shall constitute tax or legal advice. Our firm is not affiliated with or endorsed by the U.S. government or any governmental agency. The information and opinions contained herein provided by third parties have been obtained from sources believed to be reliable, but accuracy and completeness cannot be guaranteed by R.D. Smothers Wealth Management.